Hey everybody, welcome back to Markets for Millennials, and this is the weekly update from the week of August 16th through the 20th. And today, because I posted a video yesterday, I won't necessarily take a huge look at all of the markets, just a couple of things that I didn't really address yesterday. And I wanted to start here on the DXY. But we also will look at gold and silver and Bitcoin and the 10-year. And then just a quick look at the indices, just for a point of reference. And what you see here is that the DXY has actually broken this swing high from March 30th. So the next real major key level, in my view here, is going to be our swing high from September of 2020. And it doesn't really look like we have much in the way of resistance between here and there. So that move would put us up around 94.60. And what you're seeing here in practice on the daily chart is, so we've had this ascending trend line, which is our prime trend line, and we've just been cloning it up, and you can see where it has found support, and also how at one point we found this descending trend line resistance, which a lot of people saw this as a reverse head and shoulders, and we have broken through not only this descending trend line but the horizontal level, and we have this daily candle down, and so the question for me is, was this enough of a retest of this spot? Sometimes in the markets, on a support or resistance level, you won't actually get a touch of the resistance or the support before resuming off. Sometimes you just get this really quick wick down, or this quick candle, and then back up. But it is important that I think, if anything, the level to be concerned about or to consider acting as resistance at these levels. And I think just because it's acted as pretty good resistance on a couple of occasions, you can see up through July and in the late part of June. So it could be, this could provide some overhead resistance on this dollar move up, and obviously nothing goes in a straight line, so we could get some bounce between here, following along these, if we extend out these trend lines. I know it's really bad, but you get the idea. And so it looks like the dollar's rising, and in spite of the fact that the dollar has been rising over the last couple of weeks, going back to the end of May, we have seen the equity markets are not tracking the inverse, nor are they tracking exactly to the upside either. It doesn't seem to be that correlated. I guess a little correlation, but not as much as maybe I think people expect. And it's important to just remember the DXY is it's a basket of currencies against the US dollar. So it's important to keep that in mind. I had circled previously these levels on the underside because I thought maybe on the 13th of August, when we broke down below kind of this level, it was a light level, so it wasn't anything to get crazy about. But considering we got rejected here at the descending trend line, it's not all that surprising to me. And so I'm going to get rid of these right now. And I think maybe something that I might consider is maybe looking at this line, something like this. Maybe that's where the market is going to respect. Not really certain. I'm going to keep it in mind. I'm not going to keep it on my chart. I'm just going to keep it in mind because, and it's to my attention really because we have these. When we came down, it doesn't always work this way. You can see. But it's always interesting to me when we seem to have clear support or resistance and price tests in between the level. So it makes you wonder if there is something else at play. And just this line that I have here, if you actually extend it out, it does, well, not exactly, not good. It's not a good line, I guess. If you kind of drop it down here, perhaps, it does provide some. If we put it here, you can actually see the connections on the. Let's connect it to the red wicks here, so you can actually see that it actually does work out pretty well. Not exactly, but So I'll watch that over the next week to see if that provides support, and if it does, if that provides, actually let me put that back up there, because I want you to see here if this is actually going to provide support, the ascending white line right here that I just put in, and if the overhead band in the channel, if the overhead line continues to provide resistance, then what you actually are seeing is a little bit of a rising wedge, which oftentimes is a bearish pattern, not always. And that's where you kind of come back to, well, what is price in the long term? Price is in a long-term downtrend, and really, until we break the 94.60 level, I'm not going to say it's an uptrend. It's really just sideways ever since, the middle of the summer of 2020. So that's the look on the dollar. So like I said, I'm going to actually delete this, and if I find that somewhere, if I find that in this area, we find support again on the way up, then maybe I'll draw that line back in. So we'll see what the market shows us. I want to look at yields. Previously, I had talked about how price once again got rejected. A lot of people are looking at the sloping down trend line as the main resistance, but I actually think it's this ascending trend line from the beginning of August of 2020. That has been the lowest band of support. And my personal rule is once it seems like, once you get the higher lows, and you find the market symmetry. So in this case, whoops, sorry about that. So in this case, once you have established, the symmetry of the market, which to me is like, it's kind of like that, and you can see how that was that symmetry worked up here as well. But once you establish that symmetry, then my rule is once you break it and have a successful retest, then now it's a different trend. And so I haven't adjusted my lines because it's always possible that, especially on something like yields, it's always possible that you could, come up for another retest, or that this could have been a fake breakout, or breakdown, I should say. And so what you've seen here is on this trend line, you've had two retests of that trend line. Right here, it was a confluence of a cloned descending trend line and of the ascending trend line, but we've gotten another retest of it, and we've come down underneath this line right here. And so, to me, even though we had an up day today on the week, we are still down, and so I think that yields are going to be on their way down. And so where I'm going to be looking over the next week, so that's going to be starting on the 23rd. Try to get this line straight. So what I'm going to be looking for now is for price to land somewhere down here to test, again, this cloned trend line support. And so I'm going to look and see if price lands somewhere in here by the time next Friday comes along. One thing to watch out for on yields and the DXY in general is that at the end of next week, I believe the date is going to be the 26th. I could be wrong. I believe it's the 26th. Is the Jackson Hole event, where Fed Chair Powell is going to give a speech, and people are going to be watching that to see if he makes any indications about tapering, or potentially about having the conversation about raising yields. So that's going to be something you're going to want to watch out for. I don't think, and considering if you look at the the calendar, today is the 20th of August. The last few weeks of August, traditionally a lot of investors take that time away and they don't invest. So you got to be careful about about price volatility during this time. Because it doesn't really give you the right picture of where things are going. But in the case of yields, because of the Jackson Hole event and because of the perhaps lower liquidity during the next few weeks, we could actually see a big move. So that's going to be something I'm going to want to watch out for. Is will this Jackson Hole meeting combined with a period at the end of the summer here of kind of less liquidity in the system, just people, like fewer people trading and investing, buying and selling, will we get big moves? So I'll be watching that here and also on the DXY. And so that's going to be to the downside. I do think we will end up somewhere close to down here, at least to test it. I'm not saying we'll stay down there, but we could definitely see a test. And then my line in the sand is kind of close to the 1 spot mark, just a little bit below it. But I'm going to be watching here if we can get down and touch this descending trend line and then break through it. I'm going to be watching the 1 spot level because I want to see if yields are going to kind of find good support there, because it was good resistance, all across 2020 and into the very early part of January 2021. To the upside, the only hope that I would have for yields rising and getting back to a bullish trend or a more bullish trend would be to get back above the ascending trend line here and to retest it and resume off. But I think the issue that we're going to be looking at, and this is my view, I'm no expert, but my personal view on this, if you actually look, I actually need to go back to my daily chart because I need to erase this line. The one caveat here that you want to be watching out for is, I don't know what the deal is with these lines actually. I'm not really sure what's going on here. It's doing that. Hold on a second. All right, so if I pull back this trend line right here, if I go on my daily, I'm just going to stretch back a little bit. These trend lines are cloned. Let's see if it'll work now if I go out maybe 1 chart at a time. See, that's so strange. I don't know why it's doing that. The 3-day chart's fine. You can see that we tested this descending level. Now these levels, they go all the way back to the 80s. And so you've had this channel and these cloned trend lines that have that have been support and resistance for a long time. And so I show you that because that blue line, one of those cloned trend lines that has provided resistance over the years, we're getting close to that. So this ascending trend line, we were already getting close to a point where they were going to converge and something was going to have to give. And though the near-term trend is up, again, like the long-term trend is down. It's been down for 30 years. And so you can't ignore that. And so I don't think, like, we have to keep some perspective. The markets panic when yields are getting up into the 1.5 range, but then it's like, well, they've been in a 30-year downtrend. And even if the trend started to move to the upside, if it took 30 years for rates to come down to where they are, then rates are not going to go, to 5 tomorrow, or even this year, or even next year. It's just not going to happen. So the trend is down, and the Fed has honestly not proven itself to be capable of, doing what is fiscally responsible, because it'll crash the markets. And so that's kind of, that's why I think, like, there was a time where I thought yields could pop above this level. I'm not so sure about that now. And I think that if yields, and I had said previously, if yields got up to the 2 spot level, then that would have been, instantly there would have been easing to bring rates down. That's just my view. So really quick, actually because we've been looking at yields, let's look at gold and silver. Gold is back in kind of a lower end of, or a lower channel right here. So we did spend a couple of weeks in this range, you can kind of see right here. But now we're back in a range that we were in April, and then also in June. And here we are in the middle of August, and we're back in this range. So for the near-term momentum to be more positive on gold, we got to get above this descending yellow trend line. You can see that right here. Let me darken it up so that's a little easier to see. We got to get above that, but I've been saying it, and I'm going to say it again. Like, this is, you could take a trade to the upside off a successful breakout and retest of this level, but there are so many horizontal levels and there are so many descending trend lines that you have to watch out for, that will that provide decent resistance. So for me, I'm not like, I do believe in the long term, gold is going to go and make new all-time highs. I don't know if it'll be this year or if it'll be next year. I do think that's what will happen with gold, but at the same time, in the near term to midterm, price has to prove itself. And I think I've been saying this, you have to get above 1916, which is, you can see that it was, let me just mark my chart. You can see that was support here, and then resistance, and then resistance. It's a pretty decent level. Like, in order for me to get really excited about gold's prospects for breaking the all-time high, we have to get above that level. And until then, like, I'm not saying that taking a trade to the a long trade on gold is bad, because I do think that our underside support, because of these long-term ascending trend lines, I think it's pretty sound. And we're going to at some point come to this inflection point where even the top band of these support and resistance lines are going to converge, and then we'll get our move. And so that's that. And then silver is a similar look, although it's not as good. It's actually worse than gold, which, again, I've talked about this a couple of times. I think I've got oh, here we go. Sorry. I have this support line, which it looks like silver is closing at that line. That's a pretty critical support level. You could see we had that flash crash where we sold down, wicked down really far. It's looking precarious, and it's crazy. It's interesting we're still having such trouble on silver, considering that typically in a precious metals bull market, silver's going to outperform. And so we'll also look at the gold to silver ratio. Once again, the trend is up. It's going up. Long term, it's been down, obviously, since the March low, the March crash, the COVID crash. Long term trend line is down, but now it's up. So I'm actually gonna. I didn't take a look at this before. Maybe I should have. But maybe if you look at this trend line coming down, or if you go here. Maybe if you go here, I don't really know, but it seems pretty evident that the downside momentum is broken. We've had, if we count these up, oops, not that, sorry. We have 1, 2, 3 higher highs, or I'm sorry, higher lows, and I mean, and that's, I'm looking broadly speaking, obviously, like, there's smaller movements right here. Maybe you count this, but suffice to say, we've been having higher lows, and now our movement, gold to silver ratio wise, is really picking up. The momentum is picking up in favor of gold, and so it has me wondering: is the market pricing in a crisis? Is the market pricing in that at Jackson Hole they're going to announce a taper or raising rates? Probably a taper, if something. And then is the market going to freak out, or is the market like trying to front run that potential possibility? And to me, I feel like, I don't know if this works exactly the same way. To me, it feels like a buy the rumor, sell the news type of situation, where it seems to me like, because of the way the momentum is picking up right before Jackson Hole, and why so many people are expecting the taper to be announced, I feel like a lot of people are buying now, like are buying into that panic now. And then I feel like, if you heard the story about New Zealand, they were literally less than a day from tapering, raising rates, whatever, and they got one case of COVID. I posted that on my Twitter when that happened. And so they totally did an about face on it and changed the policy. They were like, oh, there was a case of COVID. We need to not raise rates. We need to not taper. We need to ease. We need to continue our easy monetary policy. So I'm wondering if the market is front running like the fear of a crash, but then as soon as we actually get to Jackson Hole and maybe it ends up being nothing, maybe they don't taper, then this will come back down. It'll be back to risk off. I don't know, the movement, right? Because if you think about people talk about the inflationary macro backdrop and easy monetary policy and inflation fears and things like that. To me, like the price action on gold and silver does not support that thesis right now. And so that's why I feel like the market is thinking something else is going to happen, and maybe it'll end up being a big nothing. And I think that like I said, if Jackson Hole ends up being nothing and they don't announce a taper or the raising of rates and don't signal that they're going to, this is going to come right back down because people are going to go risk off again. That's my opinion. Could be totally wrong. Let's take a quick look at equities. S&P still in its range. I talked about this a lot in my video yesterday. The NASDAQ has come back up. I did adjust this trend line. I think in my video yesterday I talked about that I wanted to be willing to adjust this trend line. It's just so it's so important to get it right because you want to make sure that you're either going to call this a breakdown and now we're retesting on the close, or if if your trend line is like right here, then that's like, oh, that was a failed breakout. Or if it was up here, then maybe you already had a retest, a breakdown and a retest and a resumption down. So it's either here or it's here, in my opinion. And I think that what's really going to be the indicator here is we have this level, this closing high right here. If we make a higher high, then that's going to be an indication that perhaps we did not get our retest yet. So I would say that would mean that this line is more correct. So we would have broken down and we're coming up for the retest now. So so if we did that, then price could come up right around here and then come down, or maybe the trend line is supposed to be down further and now we've broken back into our channel. I'm still going to keep my keep an open mind on that for now. The Dow is closing slightly above my support, or what was support, and then during the week became resistance, and is now looking like it's going to be support because it closed above. All of my ascending trend lines, right, on the S&P and on the Dow have held. The ones that have not are my NASDAQ and Russell trend lines. Now the Russell, interestingly, has closed above this, what was resistance. And so that's a good sign, sort of, I guess, near term, but then the Russell's still sideways. And the Russell had broken down below my long-term trend line. And so to me, what is the more dominant trend line, I'm actually going to, make this lighter so you can't really see it as well. Really, the trend in the Russell is this, sideways. Okay, it's clear as day. So that's what you should be watching. So for me then, even though I've got this line darker, what I'm going to want to be looking for, again, if I'm looking to make a trade on the Russell potentially someday, either to the downside or to the upside, then I'm looking to get above here or below here. And that's it. The Russell had a great day today, but one great day doesn't start a new trend. It doesn't mean that it's a new trend. Okay, then finally, last thing I'll hit, this I've actually been recording for longer than I thought, is on Bitcoin. And Bitcoin people, once again, I addressed this yesterday, people looking at 2-hour chart or 1-hour chart all through here. I saw somebody, I don't remember if I mentioned this yesterday, but I saw somebody who had this and this on their 1-hour chart. This was a few days ago. And then as soon as we broke right here, they didn't have, by the way, so if I adjust this, because I don't want you to get confused by my lines versus theirs, but this is what they had. If I can get rid of this. So this is what they were looking at, and then as soon as this wick happened on the 1-hour chart, they were like, oh, price is going to crash down to 42,000, or price is going to crash down to 39,000, and it's like, you gotta raise your time preference, because that's insane. Like, to look at that level on the 1 hour chart, like, I mean, granted, I'm sure there are professionals, people who are experts in swing trading and day trading who can do that on any asset, but Bitcoin is not the S&P or the Russell or the NASDAQ or the Dow or anything else. It's not like any stock where, like, what stock is going to, have like this type of volatility, these types of increases, like, for days on end. What stock has a crash down that's like 30% in like a couple of hours, and then gains back half of that, like retraces half of that 30% drop? Like, what other asset does that? So like, I think people get kind of mad because they think that, like, I'm trying to tell them that they shouldn't, like, that they don't have the smarts to day trade or swing trade, period. I'm just saying the rules for day trading and swing trading on Bitcoin, to me, don't seem to apply the same way. I don't think that you can treat it the same way or have the same types of behaviors as you would on any other asset. It's just my opinion, though. But here we are on Bitcoin. We've had a couple of green 8-hour candles in a row. I had this trend line, darkened originally. I was watching this on the decline. A lot of people got bearish when this 8-hour closed below this trend line, but then of course we, started this candle and just boom, almost a $2,000 8-hour candle, and we've made it, above just the top here, so the top of this level. So we've made a higher high. I just want to once again address this part. So I talked about in my previous video that if you look at the retraces, right, so if you go from our bottom to this little swing high, and then the retrace was to the 382 level, so almost a 40% retrace, okay, and then from this bottom wick up to our level that we had here, look at, once again, another 3.382, almost a 40% retrace on that move. And so it's not to say that it's going to happen like that all the time, but be aware of that, be aware that that could happen. And what I also did, let me put this back up, what I also did was, oops, sorry, that's the wrong direction. I also did this in reverse. I took the little swing high down to the bottom, this little wick low, and we went to the 2 level. So if that same sort of price action were to persist, if we follow that same pattern, because we've had 2 of those 382 retraces, so if we did that, then the 2 level would be right here around 52,516. I don't expect that to be the level. I'm just saying that would be a general target area to look at. So the level that I'm looking at is right here at 51,326, generally speaking. So I'm thinking that on this impulse we're gonna end up somewhere in here before we get another little retrace. And so then if we do, okay, now here, we're gonna watch this magic happen. Then if we do come up to around this level, right, look at where the 382 level is going to be. Somewhere around my my resistance level at 51,326, or my current resistance level. So we could totally take this impulse up and then come back down and retest and then resume back up again. So I'm going to be looking for that on Bitcoin. I don't know if this is going to take a week. I don't know if it's going to take 2 weeks. But suffice to say, oops, I don't know what just happened there. But suffice to say, that's what I am looking at. That's what I think we're looking for over the next week or two. And then I think that's all I'm going to look at today. Thank you for tuning in. Go ahead and hit the like button and subscribe and share this video if you thought it was interesting or if you thought it was helpful. And I will see you guys next time.